Let's stick in the energy space, where the speed and scale of the transition to clean energy has many investors pondering what risks they face in a low-carbon world. Well, with inevitable changes set to occur in the energy sector, particularly for the major oil and gas players, how should investors prepare? Well, for more analysis on this space, I'm joined now by Morphic Asset Management's Jack Lowenstein. He joins us live. Jack, good afternoon to you. It is an interesting space, particularly, with ethical funds sort of on the rise. How important is it to look at sort of carbon emissions, the future for oil and gas players in particular? I know you've been doing a bit of a deep dive on carbon asset risk. So just how important is this in evaluating, risk in the sector going forward?
Look, I think it's very important, to be honest. I mean, I spent the morning at a presentation from Mark Fulton from Carbon Tracker Initiative, which in an event that was put on by PRI, the Principles for Responsible Investing, and hosted by State Super, for which I say thanks. It was a really fascinating meeting because what I didn't realise is how much prospective value can be destroyed by oil and gas companies by some of their capex plans. And a couple of highlights. One was that Oil Search was in their top 10 potential value destroyers because most of their slate of projects look like they will lose money at current oil prices, or more importantly, at oil prices as they're predicted to go, based on the objective of keeping emissions at 2% above pre-industrialization levels.
For investors now. So for investors now looking at Oil Search, is this something we have to keep in mind right now for investing? You think this risk is not an overhang on the stock at the moment, but should be?
I don't want to pick on Oil Search specifically, but I think that any investor in oil and gas stocks needs to look at that issue. And on the one hand, I'd say generally they're not. On the other hand, the fact that oil stocks have not rallied that much, given that we've seen quite a sharp rise in the oil price of late, suggests that perhaps they are. It's hard to tell, but I do think there's a lot of there'll be a lot of winners and losers in this area, more than people are generally recognising.
I mean, when you look at Saudi Aramco, and I know you've been looking at this one today, it's obviously one of the biggest oil and gas companies in the world. And
not one of the biggest, the biggest.
Well, the biggest by revenue, that's for sure. By revenue, definitely the biggest. Yeah. But it may be investing in domestic long-term growth, right? And this is probably, you think, or what you're hearing, not appreciated by the market yet, or not appreciated by, people watching the market.
Look, we as a fossil-free fund cannot invest in Saudi Aramco, but nevertheless, it's very important for us to look at and understand it. And what is apparent is that their slate of projected projects is profitable. Now, why that's so important to us is that we think that a stable Saudi Arabia is a good thing for the world and for general economic growth. And if Saudi Aramco can be floated and the Saudi government can raise a lot of money, then they can spend it on their own long-term growth, which will keep a lid on some of the domestic tension in Saudi Arabia and keep the Middle East pot from boiling over. So that's very important.
Is it a hard thing to model? I mean, do you think in particular the market will change the views on this importance of this going forward and start to sort of impact the net present value of businesses now in terms of risk? Because it just seems like the market isn't sort of taking this into account right now.
I think that's right, and I think there's trouble. There's so many moving pieces. Yeah. One of the obvious ones is that the price of renewables or the cost of renewables keeps on falling so dramatically that all the people like the International Energy Agency and so on are struggling to keep up. They do a sort of once every couple of years they adjust their expectations for the cost of solar, for example, but they're always struggling to keep up because it keeps on falling so fast. And that has a significant impact on the viability in the long term, or even the medium term, of coal and oil and gas players.
So when you look at the oil price volatility, do you see that changing over the next 2 to 5 years with all this in mind?
I think that the emergence of US shale oil producers has reduced a lot of that volatility because basically they have very short well lives. So if the oil price picks up, they immediately go into production. And if the oil price falls, they just cease production. So they're kind of like the circuit breakers at the bottom end of the oil price.
And LNG, is LNG a big space that could be impacted, value destroying going forward?
Well, look, the Carbon Tracker Initiative data suggests that the biggest potential waste of capex is on LNG. It is quite challenged, and that's partly because solar has actually chased gas out of the market faster than it's chased coal, so which was an unexpected outcome. So I will be a bit sceptical about companies that are where they're factoring growth from their LNG operations.
So as you mentioned in your fund, are you arbitraging sort of winners and losers? Because you're obviously long short, so are you managing to already sort of see I guess, gains from this?
We do think that we can short oil and gas stocks, but we're not currently doing so because, for all the fact that the oil companies have not gone up as much as you would expect in a rising oil market. They've nevertheless gone up, so it's not a good time to be shorting them at the moment. On the other hand, we're very interested in renewables. Your previous guest was talking about electric vehicles. I think that's going to surprise the market with the rate of pickup. We're very interested in companies that are going to be enablers for that because they're generally a bit lower risk, like grid companies, where they're generally going to be big beneficiaries from things like when we can get their grid level storage or indeed electric vehicle charging operations.
All right, really interesting topic, Jack. Appreciate your time on the program today.
Thanks very much indeed.
Jack Lowenstein there, Managing Director of Morphic Asset Management.